The S&P 500 is down almost 20% in 2022 year to date. But most value and dividend stocks have not been hit that hard, and that's why it's always good to have dividend-paying companies in your portfolios. These companies pay a reward every month, quarter, or year just for holding on to their company. This usually means that these companies have a healthy cash flow and a resilient business that can afford to share some of its profits with investors. With the whole of the US market so beat down though, it makes you wonder, is the US the best place to find companies to invest in? Can we find other high-paying dividend companies overseas? Perhaps we can find companies that also pay dividends and are trading at bargain prices that give us both the high income from dividends and the potential stock price increases in 2023. Well, that's what our list is today. Experts say that the US economy might be headed for a recession in 2023. With the dollar's strength against other currencies falling, maybe going international with dividend stocks will give us a good chance that they can provide us both a reliable source of income and stock price increases during a time where the market in the US anyway isn't doing so well. If you're looking for some good dividend stocks that are likely to do well no matter what happens in the US or in the various industries, please consider today's 5 options. They're all well positioned globally and within their industry to weather whatever the market might throw their way in 2023 and beyond. All of them will pay you dividends, which means they'll start paying you a decent amount of income right away. Be sure to stay toward the end of the video as we reveal a popular company that I'm sure you've been to, and until this video, even I didn't know it was actually a European company. To keep updated, be sure to subscribe and hit the notification bell so you can be amongst the first to know when more investment inspiration videos are available. Starting off our list with our friends in the north, Royal Bank of Canada, ticker symbol RY. Have you ever heard of the Royal Bank of Canada? It's actually a massive bank that's based in Canada. And Canada, there are only really a few big banks. And because of this, Royal Bank basically controls the entire banking industry of Canada, making it easy for them to make money and face very little competition. But they are not content to stay just inside Canada. The Royal Bank of Canada has also started doing business in the United States to diversify their income, making them less reliant on just the Canadian market. And if that wasn't enough, they have a lot of different parts of their business. They do wealth management and other financial services, which help them bring even more money and provide much more stability for their company. Despite recent challenges in Canada and the Canadian housing market, the Royal Bank of Canada remains strong. Royal Bank of Canada is still a solid choice due to their diversification in both what they do as a bank and their ability to bank with other countries. Their stock is trading at a bargain and has a dividend of 4.1%. Plus, the Canadian government is there to help the bank if things go wrong. So, investing in the Royal Bank of Canada may not be as risky as it seems if you think the financial sector is risky. All in all, this is a really strong financial institution that's worth considering for your portfolio. Sticking to our theme with Canada, next we have Canadian Natural Resources Ltd, ticker symbol CNQ. Canadian Natural Resources is a top player in the Canadian oil industry. This company was founded in Alberta in 1989, where it initially focused on developing shallow gas reserves. In 1993, however, it diversified its operations by starting to extract heavy crude oil as well. As the years went on, Canadian Natural Resources continued to grow and expand, adding to its land holdings in Alberta, and through acquisition of sand oil projects, actually expanded their energy business. Oil sands are highly valuable because they function more like traditional mining than traditional oil wells. This means that once a property is set up, it can continue producing oil for many years, or even decades, without significant declines in output. This is particularly useful in today's world, where it's becoming increasingly difficult to build new oil projects due to stricter environmental regulations. Canadian Natural Resources strategic reserves have become even more valuable in recent years due to tensions between Russia and Ukraine. Currently, Canadian Natural Resources offers a dividend yield of 4.5%, which is quite great. And also, if you are looking for a company that is definitely positioned well as far as energy, this company is one of the ones you should definitely consider for your investment portfolio. If you like these kinds of videos and want us to find different stocks for your investment portfolio, be sure to leave us a comment down below and let us know what you want us to look for. Also, all the names on this list can be invested for just $5 if you use Webull and their fractional share purchase program. So with just $25, you can get all of the companies that we talked about today and start earning dividend income right away. All right, let's get to the next two stocks. We're going to go with the opposite side of the border, down to Mexico. Starting off our list, south of the border, we have Coca-Cola Femsa, SAV-CV, ticker KOF. Coca-Cola Femsa is a massive bottling company that is responsible for distributing Coca-Cola products in many parts of the world. One of its primary markets is Mexico, but it also has operations in South American countries like Brazil. In fact, Coca-Cola Femsa is the only company that bottles Coca-Cola products in Venezuela. However, recent years have been difficult for Femsa's operations in Venezuela due to the country's economic problems. But this could all change soon, as the United States is easing sanctions against Venezuela and allowing them to export oil again. This will make Femsa's operations in Venezuela profitable once more and bring back 30 million customers to the market for their soft drinks. When this happens, Coca-Cola Femsa could potentially be one of the biggest beneficiaries of the reopening of the Venezuelan economy. Even before this exciting development, Coca-Cola Femsa stock was attractive due to its low price based on future earnings, and its generous dividend yield of 4.1%, and the improving economic outlook in Mexico. Speaking of the improving economic outlook in Mexico, the next company on our list operates airports in Mexico, so they too are positioned well to take advantage of that. Now, I'm probably not going to pronounce this correctly, but here goes. Grupo Aeroportuario del Pacífico SAB-CV. Ticker symbol PAC. Pacific Airport Group. Pacific Airport Group is a company that operates airports in Mexico and Jamaica. It has agreements called concessions, and these concessions allow them to run 12 airports in Mexico and 2 in Jamaica until 2048. These agreements also include an automatic increase in payment based on inflation. With inflation worries across the globe, this pricing power definitely makes Pacific Airport Group a good choice for inflation protection as well. Pacific Airport Group operates airports in major cities like Guadalajara and Tijuana, as well as popular tourist destinations like Puerto Vallarta and Cabos. Mexico had some of the least strict COVID-19 travel restrictions in the Americas, which led to an increase in tourists and a return of passenger traffic at Pacific Airport Group's airport. In fact, in November 2022, the company had reported that its traffic was 22% higher than it was in November of 2019. Pacific Airport Group was also able to reduce cost during the pandemic, which has helped it achieve record profits. Pacific Airport Group has a policy of adjusting its dividend payments based on its profits and typically pays out most of its free cash flow as dividends. Now, this stock currently offers a dividend yield of 4.7%. The most exciting name on our list today is this one from Mexico, giving us pricing power, inflation protection, high dividend, lower overhead cost, and of course, the satisfaction to know that we are investing outside of the US. Rounding up the top 5 on our international dividend stock leaders and positioned to do well was a company I thought was an American company, and that company is Shell. Ticker symbol SHEL. Now, did you know that Shell, one of the biggest energy companies in the world, is based in Europe? This company is all about making and selling things like oil, gas, and chemicals, and they have a ton of gas stations and stores all over the place. I'm sure there is a Shell gas station nearby where you live too. Fortunately though, they are not just focused on fossil fuels, but they're also looking towards the future and working towards a more sustainable world by investing in renewable energy sources and electronic vehicle charging stations. Shell is also trying to make their gas stations and stores even better for their customers. They believe that if they focus on what people need and want, they can not only make a ton of money, but also become a carbon neutral company by 2050. Meaning, they won't be using any fossil fuels that harm the environment. Right now, most of Shell's profits do come from their traditional line of business, oil, gas, and chemicals. However, they're working on diversifying and making money from other ventures as well, but in the meantime, they're doing quite well, as, of course, we all know the high cost of energy and gas prices throughout this year. This means they also have a lot of cash to invest in the new projects, and they're also offering a hefty dividend of 3.5% to their investors. So, even though Shell is looking toward the future, they're still doing well right now. And don't worry about their exposure to the US market and gasoline. I am sure consumers of gasoline will still frequent the pump even when times are tough. Well, that completes our top 5 dividend paying stocks outside the US. For more dividend paying stocks, be sure to click the playlist of all the top dividend stocks we have on our list for 2023, and I'll see you in the next video.